know all the financial gurus are saying, buy Netflix, buy Amazon. Oh my God, I'm so mad at myself that I didn't buy Amazon sooner. Oh my God, I'm so mad at myself I didn't buy Netflix sooner. You need to own all the FANG stocks and you're going to be a multimillionaire in 2 weeks. I can't believe I don't own them. Well, why are my top holdings up 40%, 38%? Well, why am I outperforming these stocks that were apparently Amazon is the best thing you can own. It's recession proof. And everyone's just jumping in stupid money into these stocks and they're super overpriced. Well, why am I performing better? So in this video, I'm going to talk about some of my top holdings. And this is not financial advice, just me sharing how am I up over 30% in my stock portfolio and what stocks, in my personal opinion, should I be buying. This is Jake Ducey with JakeDucey.com. Let's dive right into this video. Okay, so I won't start this off with like Apple or Microsoft because we know those stocks have went down. Everyone's been pumping things like Amazon and they've been pumping things like Netflix and saying everybody's got to own these things. You got Jim Cramer doing backflips. Every one of your financial mainstream gurus on YouTube are saying, oh, buy Netflix, yeah! Okay, so let's start with Amazon. So Amazon's up 29.94% year to date. Nothing to scoff at. That's very, very good, especially in a climate like this. But the reason it's up like this is because it's nothing that's happening in the economy has any negative effects to Amazon's business. In fact, it's actually increased it. So you couldn't actually get a better market condition for Amazon than right now. Everything's going out of business and shut down, so they're getting even more volume than normal. I mean, for it to only be up 29.9% with everything going in its way. So then next you will see, let's see, what do we got next? We will look at Netflix. So you'll now see Netflix come up on your screen. Netflix is up 27.7%. Again, nothing to scoff at. That's great. I mean, but how much better can it get? Everything's went in its favor once again. Movies, theaters are closed. People don't have anything to do all day, so they're sitting and watching Netflix all day. I mean, how much better could it get? I don't think it could get that much better. Now, I don't do any mainstream stocks, and I don't have a single mainstream stock. And I thought that we were headed towards a pop in this bubble before this had happened. And so I positioned myself with a lot of gold and a lot of silver stocks. My top holding is up, let's see here, 46.04% year to date. That's Wheaton Precious Metals, as you'll see it come up onto the screen right now, 46.04%. Nobody's talking about it. 46%. Do you realize if this was a tech stock or if this was Netflix, people would be going insane. It would be getting non-stop coverage, but because it's a gold stock and because gold is the only money, it's the only real money in the world, first of all, and it's a direct threat to fiat currency. The banks and Wall Street that funds all of the investment shows don't tell you about it. It's not in the history books, so none of your little financial gurus on YouTube that are all like, dude, buy Netflix, oh! None of them know anything about any of this stuff. So we've got Wheaton Precious Metals. It's only at like $43 a share, and it's up 46%. Do you realize how incredibly undervalued that is? Netflix is like $400 a share, and it's performing less. Amazon's like $3,000 a share. These stocks are so undervalued, especially when you look at year-to-date returns. comparable to the year-to-date returns of the top stocks, right? Like 27% from Amazon, that's nothing to scoff at, that's great. But when you consider how overcrowded the trade is, it's insane. It is not worth that kind of money, especially if you know what you're doing and what to look for. So after wheat and precious metals, let's look at another one of my top holdings, Franco-Nevada. Franco-Nevada is a royalty and streaming company in the gold and silver space. They're up 37.18%, 37.18. Again, incredibly undervalued. They're up 37%. And I'm going to tell you why these things are going to keep going. But now let's look at Newmont, biggest gold company in the world. They're up 35.5%. All of my top holdings are significantly up higher than the vast amount of my portfolio. And that's why I said at the beginning of this video, why am I up over 30% on the year? During the time when... So it's like, this whole idea is so much propaganda. So I want to break down why I think gold and silver stocks are the place to be for me personally. This isn't financial advice, and why these things are just getting started. And so let's move on to there. Okay, so first let's dispel the myth that gold is a speculative investment, like it's like buying like some weird stock, penny stock or something. So I know Graham Stephan's one of the most famous financial YouTube gurus online, and he rips gold in his videos, and he doesn't know anything about it, and I'll make a response video to that. I mean, he literally knows nothing about it, and his ignorance is advertised in his video. And I'm sure he's a good guy, he just doesn't know anything about gold because it's been by design. So this first graph you're seeing right now that's coming up onto the screen is central bank gold. That's the title of it. World Official Central Bank Gold Holdings. Okay, so if gold is a useless, barbaric relic, why is it that since the 2011 financial crash, why is it that the central banks have been buying more and more and more gold every single year? This doesn't have 2019 on the chart, but 2019 was even higher. So this is a safe play for a lot of reasons. In my own estimation, this is not financial advice. So why are they buying so much gold? The reason that they're buying so much gold is because they know that there's going to be a fiat currency collapse at some point. They don't know when it's going to be. It could be in 1 year, it could be in 10 years. But you can't have a currency that prints infinite money. You can't have every currency in the world. This is the first time in the history of the world every single currency is fiat, meaning it's backed by nothing. It's not money, it's currency. There's a difference between money and currency. Money holds a store of value. Currency is issued by the government with no store of value behind it, and it's protected by men with guns, i.e. the United States military. So they know this, and that's why they're buying so much gold, because they need some way to have a store of value. Okay, next, let's look at this graph. This graph says back to 2000, prospective price to earnings multiples are at their highest in 20 years. So this is what I was laughing about. You got Amazon at like 3,000 a share or something like that, and it's up 27%. That's great. I mean, it's going to be a valuable company. I'm not saying it's not valuable or anything like that. What I'm saying is these things are way overpriced. They're way overtraded, and I'm getting far better returns, and I will continue to get far better returns than anyone that's getting advice from these mainstream people. So you'll see on this graph, you'll see right about 2000 is when price to earnings peaked. So price to earnings, the price of a share versus the earnings. That was .com crash. So this is the height of the .com crash right here. Then you go look at 2020, and you'll see that we're probably now, because this was made a little bit earlier, but probably now, as you'll see at the red dotted line, we're probably identical at the price to earnings ratio that we had during the .com crash, or very very close to it. So the reason that I like stocks that I own, gold stocks, silver stocks, wheat and precious metals, Franco-Nevada, I own a lot of small cap ones as well. The reason is because they are not overvalued. Nobody's talking about these things. And so that's reason 2. Okay, so now reason number 3 is funny and sad at the same time. So this chart that you are seeing now says U.S. national debt from the year all the way up to 2020. And you will see it is a straight incline. So the reason that is a straight incline is because what the Federal Reserve has done is print infinite money backed by absolutely nothing and buy up the stock market. And that's why the price to earnings are so out of whack. Now, all of these things are incredible for gold. This is why the central banks in that first chart are buying so much gold. They know this is all BS. They know the entire stock market rally that we had before the crash in the coronavirus. They knew it was all BS. It was all based off of basically 0% interest rates, allowing companies to buy back as much of their shares as they wanted, so much money in circulation that it's buying everything. They know all this, and that's why they bought so much gold. Meanwhile, you got these people on TV telling you to buy all these things. And so you'll see, as of the time this chart was made, we have the U.S. national debt above 23 trillion. It's now above 25, so it's already went up another 2 trillion. This does not include unfunded liabilities and Social Security. So it's really it's well over 100 trillion, the national debt. So what are they going to do to fix the unfunded liabilities? What I mean by that is all these people that don't have their Social Security, all these pensions, and every single one of these states are totally underwater. They promised all these things to the baby boomers that we don't have the money. We don't have the currency, not money. So what are they going to do? They're going to bail everybody out again. You haven't even seen the start of the money printing. Not even the start of it. The central banks know all this. That's why they're buying so much gold. Gold is a store of value and fiat currency is not. And so they're going to keep printing the money to try to keep getting the FANG stocks to go up and up and up and up and up, and telling everyone to buy those things because they're hoping that just a few consolidated stocks will basically be the vast amount of everybody's holdings, and they can make those keep going up so that people's retirement, so they can retire and stuff like that. So it's mind-blowing to see how great this national debt really is. Okay, so on this next chart, for people to do, well, gold and da-da-da. So we're talking about the companies that mine gold from the ground, right? So when gold moves 25% in the price of gold, these things have leverage to that, right? So they're moving up multiples of that. So this chart now is Berkshire Hathaway versus gold. So gold is in the green here, and Berkshire Hathaway, Warren Buffett's company, is in the gray-white color. So you will see that this starts in 2000. You will see that it's actually significantly outperformed it. And then when we started going nuts on the money printing, about 2016, 2017, you see Berkshire Hathaway start to pull away from gold a little bit towards 2018 and 2019. But then 2020, the pandemic stuff happens, and then it goes down and gold keeps going up. So the idea, and this is the Berkshire Hathaway, right? This is the stock that everybody says that you need to own. This is Berkshire Hathaway A, not B. And this is what they say, that stocks outperform gold and blah, 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 blah. So it's clearly not the case. That's all propaganda. And the reason that this propaganda is all designed is because if they pump gold and they pump gold stocks, gold is the only actual competition to fiat currency. So there's really no threat. There's no other currency threat that's really a threat to the US dollar. There really isn't. They're all fiat currencies backed by nothing. They're all printing zillions of them. but gold is a store of value. So that's why you don't know this stuff. It's why you don't see this type of a chart. And by the way, if you're still watching, make sure you hit the like button right over there on this side or this side, and leave a comment down below, because that'll help the YouTube algorithm so more people can learn this type of stuff. Okay, now last but not least, I won't go crazy on these charts. This is the M1 money stock, the money supply. So this is nuts. So you'll see on this, look at 2020. You can hardly even see how many. Look at how high. This is how much money the Fed is printing, how much money the government is pumping into the system. So you'll see how much it takes off in 2020. So the reason that I have, I have some money in uranium. The rest of my money's all in physical gold. I own physical gold and physical silver for starters. And then I own a lot of gold and silver stocks, which is my leverage to my physical metals. So you see the whole strategy here is just going to be to print currency into absolute oblivion to try to get asset prices to rise, so that there's another wealth effect where people look at their stock portfolio and they go, oh, look, everything's okay. Even though unemployment's above 20%, even though all these companies for price to earnings ratios are at the same level we were during the dot-com crash, and they're not, and even though my gold stocks are outperforming them, they're not going to tell you about it. And they're just going to hope that they can retain control and order and get everyone to basically go back to bed and trust the financial system again. And so all of this is incredibly bullish for gold, incredibly bullish for silver. So I'm expecting my portfolio to significantly take off in the fall during summer months, both mainstream stocks as well as gold and silver generally take a little dip. I'm expecting huge growth in the coming time. So I just wanted to make this video talk about how was my top holding up 46%. Many of my other holdings are in the high 30s or low 40s. And this isn't being mentioned on national television. So this is also a chance to hear a little bit more about the philosophy behind investing in gold, because it's been so muddied and people, tell you it's so unsafe and it's never made any money, blah, 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 blah. So this is Jake Ducey with JakeDucey.com. If you enjoy this video, make sure you hit the like button on this side, or make sure you hit the like button on this side. Leave a comment down below, right down there. Thank you for watching this video, and I'll see you on the next one.